What is going on, everybody? Welcome to the Investing Bros 3 p.m. live show. And once again, I always say it, but it's because it's always true. We got a great show lined up for you guys today. We're going to be asking some good questions, bringing up a coin that we haven't actually talked about a lot recently that deserves a lot more attention. But starting off, we're gonna start the whole show with the question I think a lot of people are asking right now. Should I buy Bitcoin right now, or should I continue to wait until later? We'll talk about that, taking a look at some charts and some interesting articles, because everyone thinks that they know exactly why we actually are dipping. However, I'll give you my opinion on that. Then that second coin, the one we haven't talked about a lot recently, Solana. It's down, but is another rally coming? I do believe so. And on the back end of the show, it's Wednesday. Caleb Franzen will be joining the show to talk about America debt. So everyone's favorite topic, debt, taxes, and everyone's favorite person, Caleb Franzen. You got to stick around for the entire thing. We're the Investing Bros. Let's roll that intro. Yo. I did that entire intro with my door wide open. So anyone walking up and down that hallway got a nice dose of screaming Tim. That's what you love to wake up to at 3 o'clock in the afternoon right there, though. So it's all good. Tshroom, how are you doing today?
Oh, Tim. I am way better than I deserve, and I'll tell you why.
Yeah.
Everybody's familiar with this. This is what? This is an Amazon Fire remote. Unfortunately, me and my wife are now a family that we are without our remote. We cannot find it. The couch monster has stolen it last night. I spent about 30 minutes with my arm 3-4 feet in this couch. I couldn't find it, but I did find something weird. Tim, I don't know. This is not a joke. I genuinely don't know where this came from. This knife was in my couch. I have no idea where it came from. Was that a little too aggressive?
You startled me. I didn't know you were going to try to assault me with a deadly weapon this close to the beginning of the show. I thought you would at least wait till the end, let the people have their full show. But, hey, Tshroom moves fast. So be careful.
And I joked with Amanda, I wonder if there was a metamorphosis, if our couch is a cocoon that turns Amazon remotes into like way better sick knives.
Oh, yeah, that's a possibility.
We'll see.
True. Like a portal of kinds?
Yeah. Well, exactly. That's exactly right. Yeah.
You know what? Here's a great piece of advice that I think that I'm going to give you, Tshroom, and other people out there. Now that you found yourself a nice, I'm assuming that knife. Bring it back up again. Let's do a little antique roadshow. How much do you think this knife goes for these days? If he were to sell this on eBay, how much could that knife be bought for? Maybe $20, $30? I'm not certain, but I know it's worth something. Someone else on here said, man, I'm selling my car to buy these dips. Here's what I'm telling you guys right now. I actually put a tweet out about this a couple days ago, but it's some great financial advice that's non-financial advice, right? So don't listen to this, just listen to it and then do whatever you want. If you are going through your house and you either found a knife in your couch that used to be a remote, or you find something that you have not used in 6 months that is worth value, sell that bad boy, buy yourself some crypto. 12 months today, you'll probably be able to buy at least 10 of, if not 20 of whatever those things are that you sold. Thank me later. Do it today. Yes. Very cool. I wish I had a magical couch as well. That would be awesome.
And while that was a brilliant response, Tim, a lot of bros are probably listening thinking, well, how are you watching TV and Netflix in the living room if you can't find the remote? Yeah. Amazon Fire has an app where it's just the remote. Now, you can't control the volume is the only downside, but luckily we have a sound bar that has its own remote. So rest assured, Tshroom is entertained.
Yeah, I was starting to get a pang of anxiety in my chest, wondering how you're entertaining yourself these days.
Yeah.
And I'm good to know there's an app out there saving your life.
I'm not just sitting there clicking this open.
Let's go ahead and get into crypto. As fun as knife talk is, I don't think that's why people came. Sea of green today, everybody. We're checking in our daily bubbles, and it is a sea, dare I say, ocean of green. Couple reds. You're not going to see them just popping out at you, but Jasmy's still in the red, just barely, but it's there. Also, this little coin over here, Eunice said Leo is in the red. Other than that, in the top 100, I do believe, is this red right here? What is this? US, that's a stable coin. That does not count. I think, oh, no, here we go. Whitebit is also in the red, but there's not a lot of red today. As a whole, the markets are up. And again, it's going to cause some people to start asking that question, man, is the bottom in? Is it time to buy? I'll comment on that here in just a couple of minutes. Stick around for that one. Bitcoin back up, hovering here on 65,000. That puts us up about 0.7% in the last 24 hours. Ethereum, though, I covered it this morning. Some great news as the SEC is no longer pursuing it as a security. The accusation security, kaput's done. It's got a nice little rally, 4.6% to the upside in the last 24 hours. That's great stuff. BNB's up 3.7. Solana, we're going to give Solana some love today. It is up 4.2%. I think that green number in the future is going to get very, very big. We'll pay attention to that one, though. XRP up 3.8. Dogecoin up 3.6. Toncoin, actually, it eluded me on the bubbles chart. It's in the top 100, and it's down 0.15. That's okay, though. It's not that badly down. Cardano's up 4.8. Shiba's up 4.3. AVAX, 5.8. Well, it needed it because AVAX has been one of the bigger bleeders here more recently. And ChainLink, I just got to give some love to one of my favorite cryptos here. ChainLink scoops back up into number 14 spot after sitting at 15 for about a week. It's up 8% today. We might have to check out some ChainLink here as well. Let's get into the good old Bitcoin TA. Yeah, it is very nice. Bitcoin TA, what's happening? Now, we still find ourselves at the moment kind of in this descending channel heading back down until we really break, I want to say closer to 66K. We probably don't need exactly 66K, but probably need to get closer to it to start feeling bullish about breaking out. But as we've seen here twice before, just because you break above this red line is not a guarantee that we're breaking out of this descending channel or bearish trend on a shorter term timeline. We're here on the 4-hour chart. In fact, this channel, again, if it plays out correctly, could continue to bring us back down towards 61,000, where we do have a confluence of support, as well as when I start to turn on some other indicators, we have our aggressive take profit on the 4-hour chart. If I move out to the daily, we have a nice, strong, bullish order block with the take profit coming into that level as well. At the moment, again, we're continuing to watch that daily smart trail, this blue cloud right here, still continuing to hold support, even though we wicked below it, holding support here around 64.4. We'll have to continue to watch how that plays out over the next couple of days, but some people are looking at signs of hope. I'm going to address that here in a little bit, but I want to go back to the 4-hour chart real quick, and I want to take a look at something I am watching right now. I'm going to go ahead and get rid of this red and green line because there's a smaller formation that I am interested to see if it plays out. It is a bullish formation, in case you guys are wondering. You guys can see we still have a descending level of resistance, but if I come down to this candle right here and I start here on June 11th rather than going all the way back to June 7th and I connect these candles, this would build for us right here a falling wedge pattern that could potentially protect us from needing to go all the way down to those lower $60,000 levels. If we end up losing it, forget about it. We'll end up just needing the other channel as well. But I do want you guys to know there is this formation in play as well. This could bring Bitcoin's price to break out of this falling wedge and possibly make its way, who knows, maybe up here closer to 68.3. I still think, I've said before, to feel bullish, you really need to see a breakup above 72,000. But I'll take it. You know, the bulls will take a little more pushback up above 68,000. That's kind of the short timeline here, but let's kind of get into what I really wanted to talk about as far as when will we actually expect the bottom. If you're saying, should I be buying today? Let me give you a little bit of a complicated answer. The first thing I'll say is somewhat yes, you should be buying today. Let me go back to the chart and explain to you why. Even though I think there is a good possibility, and I'll say good, not definite, not perfect, but a good possibility that you actually will see price come back down closer to 61 or 60,000. We're talking about probably a grand total of 6 to 7% of a discount. In the grand scheme of things, when you come out to a weekly chart and you're looking at buying for the long haul and looking to maybe take profit closer to 200,000, that's a blip on the radar. 6%, a better 6% price is not necessarily anything to worry about. With that being said, if you're looking for a shorter term long position, I'm still at this point not necessarily feeling comfortable about it because, like I just said, I do believe there's a chance that Bitcoin continues to correct down closer to 60,000. If I come over here and look at high block, we're going to take a look at Solana here a little bit later, but let's go take a look at Bitcoin to start this off with our liquidations. While we've done a decent job taking out some liquidity, you're still going to notice we still have a heavy amount below us. And this would make a lot of sense for traders to continue to push prices just a little bit lower. And here's why. Everybody right now is feeling a hinge of positivity. I don't know why, but every single time we see any type of bullish candle on any chart, people start to get bullish again. They start to feel like, oh, maybe this is it. Maybe we're going to go back up to the upside. That doesn't necessarily always compute that way. In fact, you got to zoom out here a little bit and notice, despite the rally from this morning, we're still in a process of setting lower highs and lower lows. You see that liquidity below us. And the other thing, and I'm really big on this when I talk to my VIP trading group, I actually said this in chat earlier today. Sometimes the greatest trading indicator is going against whatever your gut says. Meaning, the best times to buy, especially if you're newer to investing, the best time to buy is when everything in your stomach says, oh, this feels so terrible. I think I should sell because I think we're going a lot lower. But whenever your gut is feeling very positive and you're thinking, man, I got to buy this rally before it gets too late, that's often the time that marks the top. If we're waiting to see and asking the question, when will the bottom of crypto finally be in? I bet you it'll be right when almost everybody is expecting / suspecting that the prices really should drop a lot lower. There's almost an element of despair. And what we see here several times during this bear trend, we've seen several rallies here. You want to know what these are called when you're in a bearish trend? These are called dead cat bounces. We've seen a lot of them right here. Dead cat bounces spark a lot of optimism in the investor, making them think that the worst is behind them, only to set a lower high and continue to come down. I bet you, again, as we're seeing in news articles right now, a lot of people are talking about the possibility of actually dropping closer to 55, maybe even back down towards 48. What's going to happen when I think the bottom will be in, I don't think it's going to be on a day like today when everyone's so positive and everyone's so confident about prices going up. I bet you it's going to be during this dip, whether it's somewhere around 62,000, 61,000, 60,000. Hey, maybe it's 55,000. But I bet you the overwhelming sentiment in the space from influencers, from articles is going to be, hey guys, I know we're down here at 60,000, but we got a lot further to go. We got some terrible news coming out of who knows where. That day when it feels like, man, I got to sell so I can buy a lower dip, that more than likely will be the day we actually see a bottom and we'll see prices head back to the upside. When is that going to be? What price is that going to be perfectly? I do not know. I have my suspicions based off of technical analysis and areas where we see a high amount of liquidity, both a very strong order block, a rising level of support, and of course, a bunch of longs that can be liquidated. That's my suspicion. But ultimately, there's wicks and fake outs that happen all the time in the world of crypto. Your job is to learn how to ignore all the FOMO, ignore all the FUD, pay attention to the details, learn to look at what people don't want you to see. When I'm talking about people, I mean whales and large investors. Learn to see through all of the lies and look at what actually is going on. In this case, while everyone's so positive and so optimistic today about Bitcoin and other altcoins, I think that this is a day that once again will probably discourage a lot of people when we start to dip once again. Another thing that I found funny, and I want to get into Tshroom. Today, I actually have some articles I want to show you instead of you showing me some articles. I found this really funny as I was searching through Bitcoin. 3 different articles. I'm going to show you the headlines real quickly. And you would think that maybe they had something in common, but I just got a good laugh. You Today put an article today saying exact reason behind Bitcoin drop finally revealed. Oh, thank the Lord. Now we know what this dip is about, right? Well, they weren't the only ones. Today Q News, some of these I have not heard of before. This might be the reason why Bitcoin dragged below 65,000. Okay, all right. So we got 2 here in play. Oh wait, no, there's a third. Here's why Bitcoin price suddenly fell below 65,000. Guys, we're getting down to the details. We're going to get the results. Are you guys ready for it? These are the reasons. These are the reasons we got. Reason number 1 if I can get to it. Recently, cryptocurrency hedge funds have completely given up on Bitcoin.
Bruh.
Okay, there we go. Hedge funds. Guys, we figured it out. The reason we're dipping is because hedge funds gave up on Bitcoin. Wait a minute. No, wait, maybe this is the reason why Bitcoin fell off. Bitcoin saw miners sell off. Okay, so not the hedge funds, it's the miners, guys. It's all their fault. They're capitulating. Wait, no. Here's the reason why Bitcoin fell off. It fell off because of the German Federal Criminal Police, the BKA. According to ARK, the BKA sent $425 million in Bitcoin to different wallets, including exchanges Kraken and Bitstamp, raising questions about the potential impacts on the markets. You know what this tells me as I read these 3 articles? Ain't nobody got a single clue as to why Bitcoin dropped below 65,000. You want to know the real reason why Bitcoin dropped below 65,000? It's a very simple answer. It's because it could. And I know people aren't going to like that. It's because it could. If we go back over the charts, let's zoom out here. I'm telling you guys, I've said this time and time again, and someday it will sink in for all of you. When you have a massive run up in Bitcoin price, and there's everyone just excited and just shooting through the moon, glowing about how bullish Bitcoin is, you're bound to have some pullbacks. Why? Because there's this thing called when institutions miss the boat, they bring the boat back. When the retail investor misses the boat, sorry, it sucks to be you. Why is price falling back below 65K? Why is price probably coming back down to 60K, a level that we've told you guys for a while now to watch out for? The reason why is because it can. As long as there are investors, short-term investors who bought up here and really don't know what they're doing, the whales and the long-term holders will shake them out just like a big bad school bully until no more poor investors, short-term investors, weak-headed investors are willing to give up their supply. It dropped below 65,000 because people are still wanting to sell. The whales aren't buying yet. They want to test how low can we actually pull price back down to get the best buy spot possible. But until they see their rationale to say, you know what, we think all of the weak hands are gone, they're going to stay in and they're going to keep pushing price down. That is why this chart is so vitally important. Look at the time span of a lot of these yellow liquidations. Most of them are more recently. The majority of liquidity on this long position is going to be coming from short-term investors. There is still some interest. I think it's going to be a little harder, but there's still some interest down here at 55K. But for 60, 62.6, 60,000, this is just easy pick'ems for the long-term holders, the long-term whales who want to get a discount price on their Bitcoin holdings because they know what we know here at the channel. This Bitcoin top is not even close to being over. We will go over 100,000 and more than likely make our way up above 150, flirting somewhere around 200,000. They're just looking for one more fallback in price before they can finally buy it. Will it be 62? Will it be 60? Will it be 55? I don't know for certain. All I know is that the prices and the whales are not quite ready just yet to rally the price. That will, however, be coming very soon. Stay vigilant. Stay on top of it. Don't get shook out. Now, I'm about to transition here in a second. We're going to talk about Solana because I do believe Solana, I'm not saying Solana's bottom is in either. I think pretty much the entire crypto space probably has at least one more good dip, maybe another 2 or 3. I'm not 100% certain, but I got to get some water. You guys know here that we love hydration on the Investing Bros channel.
Hydration is key, Tim. And it looks like you're taking a step forward as a leader in this community to make a good example.
I take hydration seriously. I believe in my morals. And I tell people, listen, if you've been losing trades recently, odds are you're not hydrated. There could be some other problems as well. But problem number 1, hydration. Another problem is that you're probably not been thinking recently about where you're going to take all your gains and store them for the bull market like a cold wallet. And that's going to be Arculus. Go check out Arculus today. They are one of the sponsors of our channel. It's because of companies like them that we're continuing to be able to come to you guys day in and day out and give you guys the content that we are doing. But the cool part about Arculus, not only is it the best cold wallet in the world, the most secure, the greatest, but it also gives you 10% off when you use code BROZ10. So go click the link below, type in BROZ10, and you can get 10% off today. Shout out to Arculus. Please go check them out. I'm actually dead serious. That was a little bit of a bit, but I'm dead serious. If you guys are serious about protecting your crypto gains, do not trust the majority of your portfolio into the hands of centralized exchanges or DEXs. There are some of them that are very good, but hacks happen all the time. Weird things happen all the time. I have too many horror stories of friends of mine who leave the majority of their thousands and thousands of dollars of crypto on centralized exchanges only to tune in one day and they got wiped out to zero. Go get a cold wallet, please. Let's move in to the next topic. We're going to talk about Solana here. Now, I will have to address some things because another article I have here, Tshroom, it starts to give a reason for Solana being bullish. It's actually not the greatest reason in the world. I'll explain in the charts, but I actually have a good reason as to why. But there's an article this morning posted, Solana prepares for major reversal against Ethereum, analysts suggest. Now, why is it important that we're talking about Ethereum? Well, ultimately, if you come over here, let's go take a look at the chart real quick, and then we're going to go back over and read the article. But Ethereum, of course, has lots of reasons to be bullish. The SEC is dropping their lawsuit. They have an ETF probably coming in the next 2 to 3 weeks. Well, due to that, here over the last couple of weeks, Solana has been dropping versus Ethereum. And we know Ethereum is about to go to the upside. However, this article is speculating, hey, is there a chance that Solana is about to reverse this downtrend? And if Ethereum goes up and this chart ends up going to the upside as well, that simply means that Solana is taking off like a rocket. Let's get into why this article believes that is potentially possible. September, so we're talking about way back in September of 2023, September saw Solana underperform when compared to Ethereum, indicating that ETH had a stronger market presence during that period. However, updated analytical charts suggest a possible upward reversal for Solana. According to the chart, Solana has begun to stabilize and shows potential signs of upward movement against ETH. Okay, so it's not showing upward signs at the moment. In fact, it's actually showing some pretty downward signs. But I'm going to get back to that. I'm going to tell you guys why I still am bullish. Let's see what else this article is saying. A little bit more here. Let me zoom in a little more so people can read with me. And I think I did the right one. There we go. All right. The SOL over ETH chart, the Solana over ETH chart, showcases Solana trading above its 50-day and 200-day exponential moving averages, reinforcing the notion of a bullish trend. Now, this is where this article, I don't know, this was written today. It was. I don't know what this person who wrote this article was looking at, because when I turn on my EMAs, this orange line is the 50 and that blue line is the 200. I know it's a very dark line, but trust me, it's there. Tshroom, I might be blind as a bat. I don't know. Is the price action above those lines?
Zoom in a little bit. Zoom in.
Let's verify here.
So when I look at this chart, it looks like the price action is below that moving average for sure.
I was
just
thinking
me.
so too. I just wanted an economic genius, someone who finished the top of his class at his local community college, to verify that.
Well, it's nice that I happen to be producing the stream, so I'm right here.
Lucky me, believe me. All right, again, so that detail's a little off. I'm going to tell you guys why I think, though, it still is bullish. This technical indicator strengthens the argument for Solana's impending reversal and its capability to breach critical resistance levels against Ethereum, such a development could significantly alter market dynamics, making Solana an asset to watch closely. All right, so overwhelmingly, does the article get the details right? No, it does not. Interest to do a little technical analysis here. I even wanted to give it the benefit of the doubt. Is it potentially saying it's above the weekly? Well, there is no 200 on the weekly. It doesn't exist because this chart is fresher. It's above the 50 on the weekly chart. Maybe that's what they were talking about. As a whole, though, here is what I'm looking at right now that is causing me to see this chart as being bullish. And then I want to take a look at the Solana over US dollar chart here as well. It's not going to be the moving averages, but rather as I pull on and take a look here at our Lux Algo indicators, a couple things are popping off to me. First of all, Lux Algo did call the sell order here perfectly and is now hitting this second level, is getting down closer to the second level of our take profit here. That is a great call by Lux Algo, but also is a sign that we could be overextended and ready to move back to the upside. When I check on the oscillators, even though they're not bullish at the moment, we are seeing every single oscillator flashing extreme oversold positions. Bullish divergences are in play. And even though we still have negative money flow and negative momentum on our oscillator here for Lux Algo, we are getting massively overextended and should see a reversal coming soon. But it gets better when I come out to the weekly chart. You guys will see that we are coming back down close. Again, it's got a little bit further to go, but two major weekly levels of support right here. Our weekly blue smart trail and a very, very strong bullish order block here in play. This does mean, even though Solana has been being outpaced by Ethereum since the highs back here on May 13th, even though we have maybe a little bit more to go to the downside, I do believe Solana is about to pick up momentum over Ethereum. And I'm not saying Ethereum is going to go bearish. This just means Solana will go even more explosively to the upside than Ethereum will. Take a look at weekly take profits, have it cutting back up here between 0.066, not like the 3 6s there, but 0.06 and 0.078. Watch for that to come here very, very soon. There's a reason why I'm bullish on Solana over Ethereum. Checking out the Solana chart itself, I have more reasons to be bullish, and it's not that weird chart that looks very spread out and strange. It's coming in here to a more zoomed in daily chart. You can see here, same thing has happened. We just recently came down, bouncing off of our take profit and a very strong order block here as well. I come to the weekly chart. We're bouncing currently off of the weekly smart trail and an extremely bullish breaker block. We actually rode this all the way down to the bottom of this breaker block down here towards 120 or 130, give or take, but that's kind of where price went. What was the exact bottom of this? Low is $128.20. Solana, it was the darling of the first half of the bull market. Everything here on Solana, if you were to go back all the way to September of 2023 to the highs we had in March, this was the coin that melted faces. This is the coin that promised people so many gains. In fact, if you were like me, this is the coin that almost single-handedly caused my portfolio to go massively to the upside as it saw over a 10x even in the early stages of the bull market. Guys, we have a lot more to go. I still believe a Solana is one that will surpass $1,000, maybe make a push closer towards 2,000. But right now, it's just so crazy the amount of people that are bearish on it, despite the fact that when I zoom out, if I didn't know anything about Solana, if I didn't read articles where people were considering saying maybe Solana's done for the bull market, if all I had to go off was this chart alone, I would be exuberant with the amount of excitement because even though we have these pullbacks right here, right? We have pullback 44%. This is such a minor blip on a massively bullish chart. Watch for Solana continue to melt faces. And again, like I've been saying for pretty much the rest of the space, but this goes for Solana as well. The bottom might not be in, but it's a lot closer than a lot of people are talking about right now. I am looking even now to continue to scoop up some more Solana on these massive dips. Gonna take a break right there. Guys, if you're enjoying these shows so far and you love these updates, we're gonna be getting into some great conversation here with Caleb Franzen. We'll be getting into some Q&A later in the show, but you know what you have to do? You've got to smash that like button and hit that subscribe button as well. We come to you guys every single day with uploads in the morning, live shows in the afternoon. We have a fantastic community. Make sure to check out later on the show. We have an announcement for you over in our Discord, but we got to go ahead and go over to our guest for the show. It's Wednesday, which means Caleb Franzen is on the show today. First and foremost, I saw his face. Not that, there he is. Look at the guy over here. Love seeing him. Caleb, how are you doing today?
Doing good, guys. Yeah, that was funny. I popped in a little early because I know you guys said we were going to try to bring me on around 3:30. And then I see my face pop up and I was like, oh, hey, what's good?
Hey, it's what we call in this industry the great tease. Tshroom loves them. We call them tease Tshroom. So
I saw an opportunity to tease and I took it. I pulled the trigger.
Am I very blurry for you guys? I apologize if my internet's a little bit bad here, but anyway.
You're a little blurry, but the audio's coming through just fine.
Yeah. All right. Good enough.
Yeah.
And here's the thing. Sometimes when you look as good as you look with the locks like that, sometimes we got to have a blurry camera just to level the playing field for the rest of us. You know what I mean?
Oh my God.
So it's all fair. It's all fair.
That book Harold and Bergeron or something like that? That's what. Okay.
I don't know that one.
No idea.
Oh man,
all right.
Where's my cricket?
Well, guys, it's great to be here on a Wednesday, man. I've been pumped for this. So yeah,
we got a lot lined up for you, Caleb. We're having a discussion about debt. Everyone loves debt. Real quick question for you. I mean, we got to start every Wednesday now like this. It's going to become my new tradition. Caleb, Any updates you have for everybody about when we're going to get a rate cut?
6 months at least.
Okay. All right. So it's still 6 months. All right. That's going to be our new tradition. In case you guys haven't caught on, Tshroom is always doing better than he deserves, and Caleb always waiting 6 months for a rate cut. It's our new traditions here on the Investing Bros channel. Just had to get that out of the way for everybody. Now we can get into the good stuff. Tshroom, I believe you have a story and a chart that's going to set the stage for our conversation. Why don't you go ahead and take it away?
That's right. Well, you may have seen this chart trending around a couple of days yesterday. We didn't cover it because we already had our show planned out. But this chart here is actually old. So first, Forbes ran this story from the CBO. Federal interest rate payments now exceed defense spending. So this is from February. I just wanted to let everybody know, fact check. This is true, but it did not happen yesterday. This happened in February when Forbes first reported on it. I even saw some headlines earlier than that. Who cares? It's happening. It's bad. And it doesn't stop there. WAPO, Washington Post, said national debt will exceed $50 trillion by 2034, budget watchdogs estimates. And if you care about the United States at all, and some of you may not, I don't blame you if you live outside of it, but this is something that is all too familiar for Americans as we see our U.S. national debt clock getting very close, probably just months away, maybe a quarter away from being $35 trillion in U.S. national debt. Debt to who is a good question to ask. It's a complicated answer, but overall for the economy and for alternative assets like gold, real estate, and of course Bitcoin and other cryptos, how bullish is this? Do people really care? And is this going to turn the needle, Caleb? I'm curious to what you think.
Okay, so I've been involved with markets now for 10 or 11 years. And, I generally try to approach things mostly from an econ, from a macro perspective, really trying to approach things. I'm so distracted by the fact that my camera's so blurry, guys. I really apologize. Either way, I've been hearing about these types of data points, these types of metrics, the impending doom of the US due to a currency collapse, currency wars by Jim Rickards, the whole 9 yards from Peter Schiff, Harry Dent, so on and so forth. They always cite data points like this. Now we even hear guys like George Gammon talking about things like this. And actually, he's been talking about it for as long as I can remember, at least 6 years. As far as interpreting this to make investment decisions, I think investors have two paths. There's because this is a fundamental reality, right? I'm not trying to diminish the fact that this is a fundamental reality. It is. But what do we do with this? How do we interpret this? And how do we actually turn this into actionable steps for our portfolio, for our investing? There's two paths you can take. The first is to take the path of a Peter Schiff, a Harry Dent, a George Gammon, a Jim Rickards, and it's to preach doom and gloom, a pending collapse of the US economy, a pending collapse of the US dollar, and an over-reliance and an over-dependence on gold in a portfolio. That hasn't worked out too well for a lot of those guys. It has over the course of the past year because we've seen gold move up to new all-time highs. It's been a great year for gold, objectively. But it's been a long time coming, moving sideways for 3-4 years almost before finally getting this breakout. So they've had to exercise a lot of patience, and kudos to them for that. I don't approach markets that way anymore. I used to until 2016, 2017, and I had to make a huge adjustment to the way that I approach things because I started to go down a second path. And the second path is, so long as our debt to GDP is rising, so long as we're going to print our way out of crises, so long as we continue to pursue QE infinity, so long as we continue to muck up our interest expense greater than all of these other line items from a federal budget standpoint, what's going to happen is inflation. And again, Peter Schiff and those other guys tend to think of things in terms of inflation in consumer prices. The way I've interpreted that, the way I've internalized it and redirected it is rather an inflation in asset prices. And this is one of the reasons why I remain, since 2016-17, almost overwhelmingly all the time bullish on dollar-denominated assets for the long run. We can go through ebbs and flows, business cycles, monetary cycles, so on and so forth, but we know what the end game is here, and that's to continue to print, right? And when the rest of the world looks even worse than we do from a fundamental perspective in terms of economic growth, in terms of debt to GDP, so on and so forth, then the US is always going to be I don't want to say is always going to be, but it's most likely the case that over the long run, the US is going to be the cleanest shirt in a dirty laundry basket, which means that the dollar is going to outperform all other fiat currencies, But dollar denominated assets are going to be the best way to increase your wealth, your standing, so on and so forth in life. And so when we see these types of data points, all this does is reaffirm my long-term bullishness in the US stock market. All this does is reaffirm my long-term bullishness on something like Bitcoin and scarcity. All this does is reaffirm my long-term bullishness on real estate in the United States, so on and so forth. And heck, even gold, we could throw that in there too, right? I'm all about putting my bet on the fastest horse in the race, right? And so for me, gold is not that. I would much rather own equities, tech stocks, Bitcoin, so on and so forth. So that's my long-winded kind of answer there. But again, I think we have these two paths. You can go the optimistic path in a way, which is the route that I've chosen to go, or you can go the doom and gloom path. One of them, in my opinion, is far superior than the other.
Yeah. You know, while you were talking about that, I was looking up some details here. Do you guys know with all this doom and gloom talk, which a lot of these guys have talked about, especially like the Peter Schiffs of the world, they're saying go buy gold, go buy gold. Let's pretend. Let's rewind. Anyone can go back. We can all go back to March of 2020. COVID plummets every single market, every single where, as the world is very afraid of what comes next. But all of a sudden, you got these massive checks from, if you're in the US, you got the massive checks from the government. Wherever you are, you probably came into maybe some form of money to help with things. And let's just say you invested this money into one of three things. Either Bitcoin, you would be up 15x right now if you were continuing to hold that same amount. So 1.5 or 1,500%. All right. If you were to invest in gold, I want to stress this. Go to my chart here. You would be up a whopping 60%. So nothing close to Bitcoin. But when I love what Kale's saying here about the stock market, because you know what's a very slow moving traditional chart? The S&P 500. The S&P 500 does not outpace most things. You would think that it wouldn't be outpaced by gold. If you would invest in the S&P 500, you wouldn't be up as much as Bitcoin, but you'd be up 151%. And yet, what Kale's talking about here, the Peter Schiffs of the world, these doom and gloomers, they all told you, stay away from the scam Bitcoin, stay away from the stock market, put all your money into gold. And gold, again, of these major assets that people are looking for their safe haven, the least gaining product of them all. So I just thought for perspective on some of the things that Caleb's talking about, you guys should see that. I'm not saying that gold is the worst investment in the world, but if you like making money, it's not going to be one of the top options.
Yeah, well said, Tim. And I think as long as the printer is going burr, I think that it's a buy thesis for Bitcoin, right? It doesn't mean that Bitcoin's going to jump $5,000 in a day based on this thesis. It's a slow growth thesis, but it is intact, right? It doesn't seem to be going anywhere, and it's unfortunate, right? It's also unfortunate because, I mean, this is going to have to be reckoned with at some point, unless the world can be, and by I do mean the world, can be convinced that modern monetary theory is going to be viable. At this case, I am woefully unconvinced of that. So, Caleb, I appreciate your take there. Tim, your references to charts, not a shocker. But overall, I'd say it is bullish for assets. Caleb, you said it well. It's inflationary for assets. Don't hold dollars. Hold as least amount of dollars as you can afford to from a personal wealth operation standpoint. And most wealth managers are going to tell you that regardless. But now more than ever, it's important to get out of dollars. And whether it's going to be gold, real estate, a coin laundry in your city, whatever it's going to be, or obviously Bitcoin, I'd say make that decision. Don't sit on your hands any longer, because by 2034, you do not want to be holding dollars when we hit $50 trillion in national debt, right? According to WAPO, the geniuses over there. So I think we've done pretty well here with this topic. Did you guys see anything of note in the chat? As I'm sure there's a lot of spirited debate about this topic.
Actually, yeah.
I did. Go ahead, Tim.
Oh no, I was literally about to say I didn't see. I was talking to Caleb, listening to what he was saying, and then looking at those charts. I actually was not able to watch chat that much, but I'm gonna go take it now. Caleb, you sound like you have a good answer lined up for us.
So I saw something from Eric in the chat talking about how the stock market is so expensive right now. It's the most expensive it's ever been. It's in a bubble, right? If you want to go to my screen here, Tshroom, do we have all that set up?
Yes, it's up.
Awesome. Perfect. So this is the S&P 500 trailing 12-month price to earnings ratio. So this is looking at all of the earnings for S&P 500 stocks over the past 12 months. And what is that PE ratio? And then what we're looking at here in blue is the 5-year, or excuse me, in green is the 5-year average, and in blue is the 10-year average. So are we more expensive than the market has been over the past 5 years, the past 10 years? Yes. Generally speaking, though, when we look at this chart, there's so many different ways I could take this. Generally speaking, what we tend to see is because market prices are a forward-looking pricing mechanism, they are also trend-following mechanisms. Asset prices trend. This is something that we know for a fact. And if asset prices are trending, earnings generally have a decent job at trending as well. Strong earnings tend to stay strong. Weak earnings tend to stay weak. And of course, we can have inflection points and pivots within those overall trends. Nonetheless, what we would generally expect is that earnings should rise over the long run and that multiples should also rise, right? When we're looking at right here as a price to earnings multiple, right? So multiples should rise in a market environment where the market is expecting interest rates to be lower at some point in the future. So is it any surprise why the market is quote unquote more expensive today than it has been on average over the past 5 and 10 years? No, it's not, because right now interest rates are 5.5%. And the market is expecting them over the course of the next 2, 5, 10 years to be considerably lower than they are today, forcing the market to have a higher valuation today due to multiple expansion, right? And I also want to remind people, something expensive does not mean that it's overpriced, okay? There's a very key distinction here. There's a big difference in quality between a Nissan, a Mercedes, and a Lamborghini. Guess which one is the most expensive? The Lamborghini. I can't afford a Lamborghini, right? But just because it's so much more expensive than the Nissan, right, or the Mercedes, doesn't mean that it's not a good deal, right? Or that you won't get utility and value out of that car. It's still going to get you from point A to B. It's probably going to pick you up some extra chicks, so on and so forth, right? So yes, it's expensive, but you're paying for that experience, for that car, for that Lamborghini for a reason, because what comes with it, right? And so yes, the market is expensive today. It's much more expensive than other countries around the world because the US is the Lamborghini of cars.
Yeah,
makes sense.
By far.
That makes a lot of sense. You know, I'm just thinking about it, Caleb. What I really appreciate every single time you come on, we talk about this, like the passion and the attitude you have in defending and kind of going back against this doom, as you say, the doom and gloomers of the world, the people who get on here. I like to joke about it. These economists who have called 12 the last 4 recessions, meaning they're just always calling for some pullback. I love how most of the guys that are like that, who are just massive doom and gloomers, they have this very, very strong passion, this way about speaking that they're all the same. They're all the same the way they propose the world's about to end. I love how you match their energy in the exact opposite route. But an interesting question I have for you, since you still see, and I think I'm in agreement with you, you see a continuation of the stock market, which again is sitting at all-time highs, to continue to rally. I know some people are calling for pullbacks there. You're talking about the rest of the space here. It's not a time to have doom and gloom now, but to help people understand from your perspective, what would happen that would cause concern. So like, what would you see in the debt or from the stock market or in the crypto world that would start to give you massive concern that we could be in a bubble and that bubble could pop and repeat maybe 2008 or God forbid, way back in the 20s?
Sure. Great question. I'm actually thinking about writing a kind of full report on this because it's something that's been on my mind.
Awesome.
A couple of people have asked me like, Caleb, what would it take for you to get bearish? Right. So I've been thinking through this, but I generally have some answers. So fundamentally, from a macro perspective, if we see inflation get materially above 4%, 4.5% on a year-over-year basis, that would really give me a lot of pause about the sustainability of this bull market and this uptrend. And if that does happen, I would already be expecting asset prices to be selling off in that environment. But that would definitely be key, because what that entails is that the Fed is going to keep these interest rates even higher for longer and probably even raise rates once again. Another thing, I'm not fearful whatsoever of an unemployment rate of 4.5%. We're at 4% today. So for us to get the 4.5% seems like a pretty significant increase, but that's historically low from basically any other point in time. So for me, what would be a concern is something like an unemployment rate of 4.8 or 5, right? So if we start getting up into that range, that would be worrisome for sure. Nothing about the debt or the election or anything like that in and of itself is going to make me bearish. Another thing for sure that would cause me to be bearish, Tshroom, if you want to go to my screen on this.
I'm there, baby.
Which one? Awesome, thank you. Give me just a second here. We want this one right here. So this is the Bank of America high yield credit spreads. And so credit spreads right now are super, super low. And this is exactly what we want to see. Man, I've actually done some analysis on this, and it might be worthwhile to pull that up, but I don't know if we should right now. Right now, credit spreads are not increasing. Going into the GFC, when the SM, go ahead, yeah.
I just said more teasing from Caleb.
Oh yeah, right. But look, going into the financial crisis, 07 and 08, the S&P 500 was still making new all-time highs. But during that period, credit spreads were on the rise. This is generally a sign that shit is about to start hitting the fan. And so when we were seeing a divergence where the stock market was making higher highs and higher lows, but now we're seeing credit spreads move up, these should generally have an inverse relationship. So in credit spreads, the bond market was sniffing out a crisis, but the equity market wasn't. That was a major red flag. And look, I wasn't around during that. I was around, but I wasn't paying attention to markets during that period. Right? I was 12 years old. But it's something through my studies that I've picked up and said, great, if something like that happens again, where the market is making new all-time highs, is shrugging off a lot of bad headlines, but we're seeing credit spreads start to move higher materially, that's a sign that we want to start de-risking, right? And so far, we're just not seeing that whatsoever. We're at multi-year lows in credit spreads. We're at multi-year lows in the VIX. So for me, kind of from a quantitative standpoint, from a chart standpoint, trying to really look at data itself objectively, credit spreads and the relationship with stocks, with equities in general, would certainly be a very important thing to kind of have on the radar. And like I said, as of right now, it's not showing any warning signs whatsoever.
Yep.
And
for those, I think a giant portion of people listening, hearing credit spreads, maybe they watch The Big Short, but a credit spread, the difference in yield between two debt securities of the same maturity but different credit quality. Getting into the weeds a good bit there on banking and finance terminology. Could you do just like a quick 2-3 second breakdown of what does that mean? What are the parties involved with that, and why is it important for it to go up or go down?
Sure. So what we're typically looking at here is something. Let's just pick 10-year corporate bonds versus 10-year U.S. Treasuries. Right.
Gotcha.
So corporate bonds are typically going to be viewed depending on where they sit on the risk curve, right? Because you can have junk, you can have AAA rated, right? So on and so forth. There's all the credit rating agencies, as we know. And so what this is looking at is the spread between what a corporate bond is yielding, which is generally congruent with risk, versus what a U.S. Treasury is yielding, right? And that's typically going to be lower risk. So we have some difference here between corporate spreads at the top and treasuries at the bottom. We're calculating that difference, and that's the spread between the two yields. And so typically what happens is when shit starts to hit the fan, investors start to sniff out a lot of risk in that corporate debt, right? And if that risk is going up, the yield on that debt needs to go up as well, right? So that spread is going to rise. Simultaneously, investors are looking for safe havens. So where do they go? They go to the U.S. Treasury. They want to lend money to the government. And so if there's more demand for U.S. Treasuries, that yield on the bottom actually falls even more. So that spread really widens. It's a double effect, right? Yeah. And that only happens, like I said, when shit is starting to hit the fan and investors are looking for safe havens.
Yep. And you had pulled up the Bank of America, essentially, the Bank of America credit spread. Versus
it's tracked by Bank of America. It is not the the yield of Bank of America debt. It's just Bank of America has this, and it tracks U.S. high yield. So these are basically junk bonds, which are generally considered the riskiest of corporate bonds.
Sure.
Right.
Blockbuster, GameStop.
Sure. Exactly. And so, when investors really start to have fundamental concerns, they show those concerns first and foremost in high yield junk debt, right? Yeah. Because they don't want to own that going into a crisis where these companies are not going to be able to repay their liabilities.
Yeah.
Right. So this is where spreads are really, really important.
Yep. So what the data is telling me on this chart is that crap is not hitting the fan at all. It is actually at a low. Like investors are confident in even the junk bonds, and they're comfortable with that fixed income asset versus treasuries.
Correct.
Cool.
for now.
I like it. I like it. Well, guys, it's time to transition here. 3:49. If you guys have questions, whether for us or for Caleb, of course, I'm going to prioritize the ones for Caleb since he's only on here once a week. But give us some coins you want advice on. Give us questions more about these topics we're discussing for Caleb to answer. While we're waiting for some of that stuff to come in, it is time. Was the elf on today? Did he take off? Okay. We have a time for the factoid of the day. And Caleb, actually, I think is on a 2-week hot streak with getting the answer correct. Let's see if he can go 3 for 3.
Oh, man.
All right. Well, today the factoid of the day is brought to you all by BloFin. So check out BloFin for leverage trading and for trading in the U.S. It's going to be an excellent option for you. All right. The records of the Grand Historian, or Shiji, is a monumental history of what country's 24 histories? Is it A, Brazil, B, Russia, C, India, D, China, or E, South Africa? The Shiji is what we're looking for here, is the history of which country.
What are these questions? The last 3 days, I feel like, have been completely out of left field. What in the actual world? Shiji. What does that sound? What kind of language does that sound like to you, Caleb?
I got to just go with D, China here.
I mean, that's where I'm leaning as well, but I see a smirk on Tshroom's face, and it seems like that's too obvious. And on the 24 histories, of course, you got to put China in there as having. I don't think Brazil has 24 histories. Russia, I'm trying to think. I mean, Russia definitely has a couple histories, but I don't know about 24. You definitely are looking at the older. So I think India could be in there as well, but China, definitely. China might have 25 histories. I mean, they have so many. They have to put them in order. I'll tell you what. We're gonna spread our luck here. Okay. I'm gonna go India. You go China. We got to defeat the elf one way or the other.
All right,
I think
deal.
those are the two most likely answers.
Shiji. It's China.
Good. Okay, I'm glad. Good.
Wow. 3
in a row for Caleb.
The streak goes on.
So
yes.
you may be wondering, how did the factoid of the elf get to this question? Well, the factoid of the elf has very clearly been watching Netflix, where there is a history of the terracotta warriors, and the Shiji is actually the story. It's kind of like, I won't compare it to a religious text, but it's kind of like Sun Tzu. It's kind of like a Art of War, but for the early history of China. And what's funny about the documentary on Netflix, which I'd encourage you all to watch if you're interested in Chinese history, is that they don't even know, they don't really treat it like it's real, like it's true. They assume that it's kind of false and that there's a lot of falsehoods, as opposed to how historians and certainly theologians look at religious text. But we're not off track at all here on our crypto update.
Let's get in here. We got some questions. Good. I'm glad that the elf was defeated. I might not have won, but the elf didn't either, and that's all that matters to me. Logistics 1 asked Caleb a question. I've never heard of this one, though. So can you ask Caleb, does he know anything about BOEM AI and what he thinks of it as I think he says I hold $800 worth. I'm going to be honest, I've never heard of that one, so I'm not going to have an opinion. Caleb, have you heard of that one?
Never heard of it. Sorry, man.
Tshroom, you got a take here?
Well, I've heard of BOEM. That was one.
Well, yeah, but is it? I've heard of BOEM, but I've never heard of BOEM AI. Is that?
Yeah, logistics 1, unless you're involved in that project and you got in early, if you're new to crypto, be very, very careful with those types of projects. If it's below 20 million market cap, I'd be extremely skeptical of that $800 ever being returned to you.
There was also an article put out a couple weeks ago. We briefly covered it. Probably should have given it a little more attention. I'm also very hesitant, unless there's a lot of publicity about it, with projects that have AI on the back end. There was an article written about the massive amount of scamming that was going to be coming in the AI world, with promises about them being the next great AI. Again, for all I know, BOEM AI is legitimate and it's going to do great. I don't know, but make sure you do heavy research.
Think about
not just one source or something.
And this is an investment show, right? So let me take that another step forward, because I've been listening to some cutting edge thought on this. Think about AI, right? The most that you pay as a retail consumer for AI is probably $20, maybe $40 a month for ChatGPT 4.5 Turbo, whatever, right? Is that a lot of money? No. That's not that much money per month. And in reality, I'm scrolling through Instagram, scrolling through TikTok, seeing all of these AI companies, and you can get free accounts and make like text to video, text to song. It's all free. So where's the business model for AI? Sure, the technology is cool, but is it profitable? You have to be careful with that. And Nvidia clearly is the one that's making a lot of money. But what are they doing? They're selling chips to Google, Microsoft, and other AI competitors. But where's the actual end consumer? Why am I paying $500, $800, $10,000 a month for AI when it looks like a lot of the applications, the hard-hitting killer apps for AI, are free? So be careful. That doesn't mean that AI crypto is worthless, right? It's too early in the cycle to know that. And I'm getting this from Chamath Chapatia on the All In podcast. He's been harking on this. Is like AI. Yeah. It's not a bubble because it's too early to call it a bubble. It's just it'd be like calling calling Web 2 a bubble in the 1960s. It's like, yeah, it might be like a micro bubble at the very infancy of the internet, but it's not the bubble that we're going to see in 2001, right? The actual .com bubble. So, boom, I'm going to leave it there.
There we go. We got some questions here. Your weekly question, Caleb, from username. Want to know why I know it? First of all, it's the blue name right next to the question. Secondly, it starts off, "Hey Caleb, username here." That's becoming a thing. "It's been 1 week of coconut oil and my flow is not top shelf." So I think he's accusing you of some fake news here. How long does this take? Also, should I buy Link Dip?
That's funny.
It's going to take at least a week and a day. So maybe tomorrow you'll wake up and, who knows.
You were ready to quit right on the precipice of glory.
Yeah,
your username.
You're right on there, So just stick it out a little bit more. One more day, you should be good to go.
For anyone who's very confused, last week we were wondering, the top inquiry of the chat was, how does Caleb keep his hair looking so fresh, so luscious? It's coconut oil, but it doesn't work for everyone. Listen, results might vary is another thing that we need to disclose. Right. For example, Tshroom, did it work for you when you rubbed coconut oil through your hair?
No comment. But we like to have fun. Caleb, I think you had a chart that you wanted to share.
There is, and maybe I'll just tie a bow on that last segment there with past performance is not a guarantee of future returns. Okay, let's talk. Thank you for that. Let's talk about Link though. Look, a lot of charts look like this right now. In my opinion, altcoins for me, from a very short-term trading perspective, are definitely off limits. If your hardcore conviction, you're stacking these, your investment thesis is 1, 3, 5, 10 years down the line. If you fundamentally view these as being discounted prices, go ahead and stack. I'm not going to be able to tell you otherwise. For me, for my trading style, the way I take advantage of different market conditions, this is not friendly for taking risk, right? So what we're doing here is we're breaking below that 100 and 200-day moving average cloud. So we have the 100-day EMA in green, the 200-day EMA in black. We could see we've had some choppy conditions in the past. It can kind of get you out of bad market conditions and go through this little bit of a drawdown, get you back in and sit tight, right? Follow the trend here as far as I'm concerned. And so what happened? We had a breakdown back here in April. This was very concerning. We actually flipped it into resistance. This is when username had asked me about it. And I said, look, for me right now, it's off limits. And look, it gave me a huge middle finger, ripped in my face, went from like $13, $14 all the way up to 19, right? Congrats. But now what has it done? We've round tripped that. So unless you took profits up there, this was just an emotional roller coaster. And now we're back below that 100, 200-day moving average cloud. So once again, for me, this is off limits until or unless it can get back above that range, right? And you want to stay long so long as that happens. But we're not there yet. So I think from as far as I'm concerned, this has work to do.
Yeah,
could
very
go
much
lower.
So we have a question here, which, by the way, ChainLink, I'll do more TA on that tomorrow as well. I think there's a chance we dip back down. There is some strong support where we recently have been, but I agree with Caleb. I'm not convinced where we're currently sitting at 1438 that we can't drop any lower than that price. Granny's Garden says, Caleb, when you mention the stock market is in a bubble, when you mention it's in a bubble, does that mean Tesla is also in this puzzle? Should I wait until, or I should wait until I purchased more? So I'm thinking they're asking Should she buy now or wait a little bit longer for Tesla?
Perfect. Go to my screen once more. Guys, we are not in a bubble right
Yeah.
now. This is not a bubble. This is ARK. This was a bubble. This is not a bubble. So during bubbles, what do we tend to see? We see speculative mania. We see extremely overextended valuations. Guys, NVIDIA today is cheaper than it was a year ago. NVIDIA today is cheaper than it was 2 years ago on a fundamental basis.
Yeah.
Right. So when you look at their price to sales, when you look at their price to earnings, are they expensive? Yes, they are less expensive today than they were more than a year ago, despite the fact the stock is up like 250% on a trailing 1 year basis. Right. We are not in a bubble. During a bubble, we also see recent IPO stocks. Thankfully, there's an ETF that tracks this. This is looking much better than it used to, but a year ago. But this is nowhere near bubble territory. Right? These stocks, we should typically be seeing SPACs, a lot of new IPOs coming onto the market. We haven't really seen many notable or substantial new IPOs come onto the market. What do we also see? Massive mergers and acquisitions due to low interest rate financing. That is not in the market. That we are not in a bubble today, right? Based on my definitions and how I approach, we are so far from the conditions of a bubble. Are certain stocks potentially in a bubble or overextended? You can make that case. People have been saying that about NVIDIA for the better part of the past 18 months, and they just continue to be proven wrong again and again and again and again. Eventually, one day, perhaps, maybe they will be right? But so far, they're not. So I just want to be very clear. I don't think I said that the market is in a bubble. I said that the market is more expensive than it has been on a trailing 5 and 10 year basis on average. But that does not by any means mean that we are in a bubble today.
Right? I did not hear you say that we were in a bubble. In fact, to the contrary, for sure.
Yep.
Okay.
And,
Awesome.
and I want to address the other part of the question, asking specifically about Tesla. I'm not saying buy necessarily right now, but the other thing to be very mindful of is obviously the NASDAQ, the S&P 500, even Dow Jones. They've done pretty well despite higher interest rates over the last couple of years. Guess what industries do not do well when interest rates are high? Why is Tesla down? I'm not going to show all the charts because I'm going to save some time. We're about to wrap up here. But go check out Ford. Go check out Toyota. Go check out Nissan. None of the car markets are up. Check out how real estate as a whole is doing. It's not necessarily at these all-time lows or anything, but it's not anywhere near the top either. Why? Because those are the types of industries when interest rates are high, they don't do as well. There's a very good reason why, like last year, Elon Musk pushed so heavily for Jerome Powell to go ahead and start cutting rates, because one of his main companies, Tesla, it doesn't do well when rates are high like this. When rate cuts come, and again, whether they come this year or 6 months, as Caleb told us in the very beginning of this interview already, that's when you're going to see when we get rate cuts or we get closer to rate cuts coming in. That's when you're probably going to see Tesla, Ford, Nissan, Toyota probably start to head quickly and dramatically to the upside, because it will allow people to have better purchasing power to go buy things like cars, houses, etc.
Yeah, absolutely.
So,
another Netflix recommendation really quick on that bubble.
Ooh.
If you don't believe Caleb about the bubble, this may not convince you, but at least you'll be entertained. Go watch The Big Short. It is on Netflix right now. Look, genuinely, nothing made me more bullish on Bitcoin than watching The Big Short last week. It's just such a great watch, and it really does give you the insight into what it takes to create a bubble in a market like the United States. It takes a lot of deception. There's a lot of deception going around, but not at the level that we saw in 2009.
Tshroom, have you seen Margin Call?
I haven't.
I have.
Okay.
I watched that with Shannon. That's a great movie.
Okay, so for everyone watching this, if you want to see probably the most underrated finance movie of all time, which kind of goes over the Great Recession and the financial crisis, watch Margin Call. Kevin Spacey. There's a couple other guys in there. Yep. Really, it's an amazing movie, actually. It's really good. It's very tense. It's a little slow, but just you'll really, really enjoy it, I promise.
It is one of those movies, if I had watched it before I became an investor, I would have said, what the heck am I watching? I don't want to. But since I've been following economics and following charts and it's actually so amazing watching what kind of went on in that time, how people like that thought over on Wall Street. And I don't want to spoil too much. It is a great movie. Caleb, I highly recommend it as well. You guys got some great movie recommendations today. Shout out to Caleb and Tshroom for that.
We have to
do
this. We have to do this because we never have the organic opportunity.
Oh my
Apparently,
gosh.
It's on Netflix, but it's not in the U.S. So NordVPN, there's a link down in the description.
Oh, there you go.
We never promote Nord, but we technically do. Love them. They're great and awesome VPN.
Boom.
I have a VPN myself. I'll just plug you guys and what you guys are doing. Who do you guys have it through?
Nord.
That's exactly what I use, actually.
Come on.
I need to use your guys' code. I'm going to unsubscribe and resubscribe with your guys' code. But I take advantage of that Netflix changing my country all the time.
I bet you do.
Super clutch.
What's the kind of we have to?
Yeah, we gotta wrap up the show. I mean, very, very grateful once again to have Caleb on for this fine Wednesday afternoon. I see a lot of questions in chat. A lot of questions asking, coin recommendations. How high or how low can this coin go? People are asking all the time, what can you guys review my portfolio? Can you give me feedback? How do I learn more about successful trading? And to wrap out the show today, I told you guys earlier this week, we had a big announcement coming, and today we are launching it. Tshroom, can you bring up our graphic here? We are launching the beginning. We're not calling this like the Bro education platform. We're not calling this the Bro Academy or anything, but it is membership specifically so that you guys can interact with myself, Tshroom, Crux, and several other extremely wise investors. There's different membership options. You can see them on the screen. I'm not going to go through every single one, but we have them split up. So whether you want to learn more about long-term investing, or whether you want to learn more about trading, or maybe you simply just want to learn a little bit more about how to build simple portfolios, there's an option for every single one of you. Please go check them out. First of all, join our Discord for free. But if you have further questions, you want to go deeper with the bros and learn even more about how to invest, you're going to find all of that information in there as well. And I'll say this, I've said it before, but I'll say it again. Guys, I'm going to be here. I'm going to help you guys look at coins, look at prices, understanding, hey, what's the best investment in the coins? But something that's massively over or underrated is people investing in their own education. That's what we're seeking to do here, to bring you guys very, very low level, cheap / affordable education so that you can actually make those thousands, those millions, maybe some of you billions, to change your life, your family's life, and then hopefully the rest of the lives of the people around you as well. Go to Discord, sign up today. We cannot wait to get to interact with you guys even more. With that said, Caleb, thank you for being here. Loved having you once again. The rest of you guys, if you haven't done it already, smash the like on your way out. Hit subscribe. Go check out our Discord and those membership options, and we'll see you tomorrow. Adios.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots, stack bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor of the TA. Shout it out loud on the PA. Tshroom's news, got the word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots, stack bank. We are investing bros. We are investing bros.